Welcome back, Alpha Hunters. Hope everybody is having a great start to the week. Hopefully, you had a great weekend. It is a magnificent weather outside Monday. Man, let's see what is going on to start off the week. All right, we got the Qs are up. Or, no, I'm sorry. The SPY is up. Well, the Qs are also up. The SPY is up roughly 0.12%. Yeah, 1.2%. We did gap up today, about 0.7% there on the SPY. Kind of interesting, and we'll see why that is interesting here in just a bit. Nice quick pop there on the open. Then we rolled over, took out the open low, and kind of hung out there for a couple hours, right? Just kind of bounced around between that initial low that we set there and that first hour and a half or so, and just kind of bounced around between that and roughly the open area for much of the middle of the morning. Past hour, we did a nice little run here to start off kind of the middle part of the day, lunchtime hour. And all right, I dig it. I dig it. What's kind of interesting here, it's interesting here is I'm gonna look at the Qs. Well, the Qs did not take out that high from the morning. So the SPY pushing up, taking out this high from the start of the day. The Qs did not. Qs actually got hit pretty good here on the sell down. Really kind of lagged behind here in the middle part of the day. You can see this little low point it had just before 1 o'clock Eastern time. We had a little bit of a lower low compared to kind of what the SPY did. It was a little bit more of a higher low here. So kind of interesting. Then we kind of went on a little bit of a rip here on the market. SPY, Qs, everything kind of went bullish. So not too bad. And yeah, so we'll see how this next hour kind of shapes up. To me, that doesn't really sound all that great or doesn't look all that great because you don't really want the SPY leading kind of breakouts. And that's basically what we saw, right? Typically, you don't want to see that because that means the Qs, which weigh the most, are not breaking out. They're kind of underperforming. So it kind of lets me think that maybe we'll see some weakness here come into the last 2 hours of the trading day. All right. So that's kind of the SPY and Qs generally. IWM had a nice gap up today, but they got absolutely wrecked on that sell down that they had this morning. They gapped up 0.95%. Nice gap up. First 10 minutes looking okay, but man, that first hour and a half after that, first 10 minutes, man, it was brutal. They just kept getting hammered all the way down, got to negative. Kind of like a little double bottom here, higher low. Nice little trend that it's been in over the past hour. Okay, all right. The DIA has been very strong today. As you can see here, nice gap up here on the DIA. The Dow Jones looking very strong. It gapped up roughly 0.7%. Didn't really sell down all that much. Kind of just more of sideways consolidated there in that first hour and just slowly grinded higher. You can see the past hour even continuing to further extend. Nice action there on the DIA. Seems like TradingView's a little slow. It's all right. Yeah, nice gap up here. Nice gap up. Not really. If you're looking for a really good spot to possibly go bearish on the DIA, I would think you're probably getting into a pretty good zone here where these lows are at, and also the 10 EMA is a little bit above you. So I think you're probably starting to look for some bearish setups here, at least on the DIA. Maybe the RSP, we'll see. RSP very much looks like the IWM. Strong initial pop there. Nice gap up. Very quick pullback there in that first hour and a half. Very strong pullback. Then just kind of bounced around kind of the lower end of the day. Nice little run here for the past hour. Looking pretty good. So what the interesting part, though, I'm going to say about today's price action is really yields. Yields are up over 1%. Now, it's nothing crazy, especially looking on a daily. You're like, oh, okay, it's nothing crazy. But the fact is, they did open higher, especially compared to where we ended on Friday. Okay, so looking here at an hourly, so that we opened higher, kind of rolled over, kind of filled that gap there on on the yields, and then we just kind of pushed higher. Doesn't really say like it looks bearish. Might slowly grind higher here for the next couple of days. So we'll just have to wait and see. Um, I was kind of curious to see if we were going to just come out early this week and drop off, because if you were wanting to probably be bullish on the market, you're probably mostly wanting to see yields drop and start to really kind of trend lower. So that's not exactly the best way to start the week. But yeah, yields are holding up, and I'm kind of surprised. The market is as bullish as it is, but that was kind of what we were talking about last week. Watch out for people being really optimistic early part of this week. I kind of thought we'd be bearish the first half of the day, and I'm not saying we didn't have a pretty good bearish move. Most of the bullishness that we saw today was really geared around the gap up that we had this morning to start the day. We had that quick gap up and quick run after that gap up. So, but we did see some bearishness. We had a struggle to kind of get it going back bullish until we got to the past hour or so. So yeah, it's kind of an interesting day. I don't really dig the bullishness, mostly because I don't feel like we're going to get anything we don't already know. I think we know what we're going to get this week outside of like earnings stuff. But earnings haven't been good this earnings season. So that's just kind of where I look at what Fed could possibly say, what maybe AAPL says, and it's like, I mean, the Fed just says, yeah, we're still fighting inflation. Well, they're not going to be cutting rates. And I think that's one thing that we've seen here over the past couple of months. I think more and more and more investors are like coming to that realization that we might not have an inflation, and or a recession. And I think that's kind of the conundrum that a lot of investors are dealing with right now, because so many investors are used to, okay, inflation, recession, bear market, those two things kind of go hand in hand. And we're not really getting recessionary signals too much, but that also goes to the Fed doesn't really have a reason to cut rates, right? If the Fed doesn't have a reason to cut rates, equities are overvalued because people keep expecting rates to be cut, and the Fed has constantly said we're not cutting rates anytime soon. So, I mean, they only cut rates if there is a necessity and they need to spur economic activity, and they don't. It doesn't seem like they need to do any of that. Like the economy just grew. The economy just grew. I think last week the data came in at four. Where's the GDP? 4.9%, and it was forecasted to come in at 4.3%. So yeah, I think people are just slowly kind of getting there on valuations on equities, because yields aren't going to go lower, which that's how you discount the cash flow of future companies, or the future cash flows of the companies. So it's kind of putting people in a weird spot. It's like we're not seeing a recessionary signal, but we're also seeing signs that equities are valued, and the way we value equities isn't going down. So, right, I mean, they're staying elevated. They're continuing to push higher. What's the 2-year up to? 2-year pushing up a little bit. We had a pretty good breakdown late last week, Thursday, Friday. Nice little push higher, kind of checking in with the 10, 20 EMAs. Holding on to this 50 EMA, and you can see it's done it several times before. Be very curious to see if we get multiple days of closes below this 50 EMA here on the 2-year yield. Because if we do that, then you can see that, it's been respecting it for a while now, for going back at least 3-4 months. So if we do get below that 50 EMA, then maybe we'll start to see yields come down. But until we see that, I'd imagine we probably just continue to hold higher. And today's also another gap up day on the 2-year. 10-year had a gap up, 2-year had a gap up. The inversion yield, the 10-2 inversion yield, nice little lower wick here. This thing looks like it's been consolidating here over the past couple of days. It's been breaking out higher. And one of the things that's kind of interesting is, and I've seen other people kind of talk about this, but we've talked about this on the channel, is the 10-2 inversion. Whenever it starts to really run up bullish, not auto, I won't log off. When it really starts to run up bullish and gets back to the, plus line here. Tell you what, I'm just gonna do this. Settings. There we go. So when it gets back to positive here and it's not inverted, so typically when we start to see that climb, it gets pretty steep. It starts to get pretty steep. It starts to really accelerate, kind of like how it has been over the past month and a half. But it just continues to do that, and once it pops the zero line coming from the inversion, it really accelerates. So typically when we do see that, what usually happens is we get a quick pop on the stock market, and then we get the sell-off, right? Because what happens is yields drop, and we go into a recession, okay? So there's a couple things there that's really kind of tough to kind of think about, especially because there's a lot of moving pieces all at once. When the yield curve uninverts, what you typically have, let me see if I can get this chart up here. What you typically have is a reduction, or the 2-year yield actually is the one that drops off. That's the one that drops. The 10, or even the longer term yields, whatever yield curve you're looking at, those will typically not drop off as much. Not to say that they won't, but let me put up the 2-year yield. Oh, you know what? Tell you what, let me put on a new price. There we go. So we got this inversion. This is back in the tech bubble, right? And we get massive switch, go back to the normal way. It gets uninverted. But you see the 2-year yield, it drops off very sharply. That's typically what happens. Okay? All right. I think we're all on the same page. Very, very cute. Very cute. This time period, we're going on the not tech crash, the great financial crisis. Great financial crisis. We invert for a year, half a year, maybe about a year here, and it wasn't a crazy inversion. It just it lasted for about a year, and you see we massively moved higher on the yield curve inversion, but we saw the orange line here drop off. That's the 2-year. The 2-year drops off. That's the one that you got to watch, right? Well, let's fast forward and let's come all the way to today. Okay, and this is where a lot of people are making, I'm not going to say they're being dumb, okay, and people are being irresponsible or anything like that, but what we're not seeing is that 2-year yield drop off, right? We're seeing that run up already of the 10-2 inversion, making a dramatic climb. Like over the past 3-4 months, it's made a dramatic climb back to the zero line. It hasn't quite got there, but you can see how much it's moved over the past couple months, especially compared to some of the previous time periods where we've been inverted. You see that run up, and you see immediately that 2-year yield. Actually, back in the tech bubble, the 2-year yield started dropping first before the inversion started coming through. What about this one? So we had a little bit of a drop initially. Yeah, I mean, we started seeing the 2-year yield drop first before the inversion yield started moving back higher. But look at this time. the 2-year yield is still moving higher. That is a stark difference. That is a very stark difference. So what is pushing the 10 and 2 to move higher rapidly? It's long-term yields. Long-term yields are pushing higher so fast that the 2-year yield isn't even dropping, but the yield curve is dramatically moving higher. That's the difference. And that's why we are not going to, I don't think we're going to see a recession, honestly. If we see a recession, it'll be so short-lived, it probably would be a blimp on the recessionary radar for historical purposes. It might be like the one we got back in 01, 02. That one was very short. I think it was 02 where we got that recession. It was a very short one. It was very minor. It wasn't a big deal. The one we got in 08, 09, the real estate and great financial crisis, that one was a much more substantial recession. I don't know if we're going to get a major recession. I really don't. I don't think we will. And I think the only thing we are going to see is a massive correction in valuations of assets. I think that's what we're going to see because we are not seeing yields and interest rates do what they normally do, which is when the yield curve starts to uninvert, starts to move dramatically towards being uninverted, the 2-year typically drops off, and we're not seeing that. So that's where, I mean, every bear market, they're all different. And typically when, historically, when we've had bear markets, we've had recession. This is where I'm kind of torn because I don't think we will have one. And if we do, it'll be so minor. And I think this bear market on equities, I think it'll be more about yields and interest rates, revaluing equities. So that's just kind of the way I've kind of been looking at it. I haven't really put that into a video, and I figure we just talk about that here, kind of show that off. But this is a big deal. The fact that the 2-year is not dropping off, and we are already seeing the yield curve for the 10 and 2 move dramatically off the lows, start to move back to the normal way. So yeah, that's kind of how I'm kind of looking at things right now, and it'll be choppy, right? Because there's going to be data that comes out that says, "Oh, we're not going into recession," but equities are still overvalued, especially when you look at yields. And if yields continue to push higher and yields hold up, then equities are just overvalued. So, anyways, I just wanted to kind of go through that a little bit. And, yep, there you go.